Ladies and gentlemen, brace yourselves for a revelation that might send shivers down your spine. Picture this: an unassuming conference room in the heart of Switzerland, where decisions are made, decisions that ripple through the lives of billions and shape the very core of the global economy. Who are these power players? No, they are not the overt, flashy titans of Wall Street, but a select few whose hands deftly pull the strings behind the scenes. Today, we delve into the clandestine realm of economic puppeteers and ask the daring question: who really controls the global economy? Before we dive deeply into their world, let's rewind. The global economy is an intricate web, a sophisticated tapestry interwoven with banks, corporations, governments, and, yes, unseen influencers. We often point fingers at household names like Jeff Bezos, Warren Buffett, or Elon Musk, who seem to tower above us all with their immense wealth. Yet, they are just the spotlight performers in a show that runs on subtler powers and antipodal forces. Now, that's not to say these individuals don't wield significant influence. Jeff Bezos, with his one-time net worth peaking at around $200 billion, revolutionized the way we shop and consume. Elon Musk, steering innovations with a breathtaking valuation of over $800 billion for Tesla at its peak, is on a quest to redefine transportation and colonize Mars. Their enterprises have reshaped industries and stock market landscapes. However, even their remarkable feats hover in a domain regulated largely by forces differing from immediate perception. Herein lies the crux. Governments may appear to control these titans and their businesses with regulations and taxes, but they, too, operate under constraints of more profound economic mechanisms. These aren't the names you're accustomed to emblazoned across headlines and skyscrapers. They're entities like the Bank for International Settlements, BIS, the International Monetary Fund, IMF, and the World Bank. These institutions quietly conduct a symphony of wealth and poverty, orchestrating policies that influence the ebb and flow of money across continents. Let's consider the IMF, for instance. Headquartered in Washington, D.C., it might not attract as much day-to-day media attention as other organizations, but with its oversight of approximately $1 trillion in financial resources, it's a powerhouse capable of influencing fiscal policies worldwide. Countries seeking funds often must comply with stringent austerity measures and policy reformulations to qualify for IMF loans, fundamentally altering their economic landscapes. Similarly, the BIS in Basel, Switzerland, is less of a household name, yet profoundly impactful. Acting as the bank for central banks, it provides a platform for central bankers to collaborate and devise monetary policies. These policies, though crafted within closed walls, decide interest rates, influence inflation, and direct currency movements that affect everyday transactions worldwide. Now, here's the twist. These entities are often perceived as agents of stability, stepping in to prevent crises and maintain balance. However, critics argue they consolidate power, exerting disproportionate influence over countries, especially those with precarious economies. Some claim their initiatives preserve the dominance of financially stronger nations under a guise of assistance and cooperation. Diving deeper into this assertion unveils a history peppered with controversial interventions. The structural adjustment programs attached to IMF loans have been notorious for their stringent requirements that can lead countries into economic turmoil rather than out of it. Venezuela, for example, despite its immense oil wealth, struggled under the weight of such reforms, facing hyperinflation and a socio-economic quagmire as it heeded fiscal prescriptions from international creditors. Yet it isn't only emerging nations that are bound by these financial entities. The Bretton Woods system, established post-World War II, laid the foundation for these financial institutions, ensuring that countries from the West, particularly the United States, maintain pole positions in this economic hierarchy. With the United States voting power in the IMF close to 17%, a significant figure when decisions require 85% agreement, It's evident where major influences rest. It's essential to draw attention to other influential coalitions like the G7 and G20. These forums, although more public, play pivotal roles in steering the global economic dialogue, setting agendas that shape international financial conduct while promoting trade and stability. Yet, their limited membership has drawn criticism for underrepresenting the majority of the world's population, notably those from developing regions. The absence of equitable representation risks marginalizing a vast portion of humanity from critical economic considerations and decisions. Here's where the